you've got your current price right here. So it's 25,793.25. So that's what this current candle is right here. And if you look over here, there's your badge that tells you that. So those are two are tied together right there. But then you got this delta right here. And I struggle with this a little bit because it's really, in real-time charts, like Apple and SPY and Microsoft and stuff like that, it's real easy because this is referencing what yesterday's close was. Well, with futures, there really isn't a yesterday's close. They do break the session and then restart, but there's not really a stopping point. So what I do is, since our market closes at 4 p.m. Eastern, then I go back and I just make a mark right here, vertical line at 4 p.m. yesterday. And then I look at where the current candle is, what the trend is, based on where we were at 4 o'clock yesterday. Now, actually, I think I figured out that this delta that we've got up here, so like SPY is showing a delta of 7.25, 7.25 down. It's bounced around a little bit because it is live. Although this data is, you can see this little D right here, that means it's delayed. So I think it's delayed by about 15 minutes. You can pay extra for futures data if you're interested in it and trade futures. I do not, so it's a waste of time for me to do that, a waste of money. And I can just look, if I'm looking at the overnight, it's already happened. So I'm just kind of looking at what happened and what the trend is and what does it look like going into this morning. But anyway, the point of all of that was the fact that this delta, I believe I figured out, is based on the market close at 4 p.m. Central Time, which is when the futures markets close, and those are traded out of Chicago. So that is actually everybody knows that 4 p.m. Central is 5 p.m. Eastern. So actually, my little 4 o'clock vertical line here is a little bit early, so that's why it doesn't match up with that. But for me, that's okay. So actually, if I would clear this up, and then let me go back to, if I were to look at it, actually, if I go to the 5 o'clock candle, which is going to be right here at 1700, I think that this actual delta number and the candle here is based on this 5 o'clock candle. It's what I believe. As you can see, we closed green right here and we are down. That's probably, let's see, that's at 834, and we're at 70. So yeah, that's about 50 points or something like that. And it's like 48 points. So that looks close enough to me. So I'll just say it's based on the 5 o'clock candle, but I don't really care about that because I'm looking at 4 o'clock. Where did the market actually close? The SPY and SPX, where did they close at 4 o'clock? And where were the futures at that point? So that's what I'm basing it on. And then the overall thing is I just kind of look at what happened overnight. You can see right here, it just kind of held steady, and then right here around 9:45. Now remember, on TradeStation, this is when the candle closed. This time marker is when it closed, not when it opened. So at 9:45. So this is actually the 9:30 candle. This is a 15-minute chart here. So this candle opened at 9:30, closed at 9:45, and then we started failing right here. And you can actually see we're in compression a little bit right here with the 3, 2, 1, and you got the red dots going on here. So, and you can see price kind of tightened up right here. This whole period was really tight, but we were losing volatility right here. It's kind of like getting less and less negative and coming up, and it got into this point where it settled down. And you can see how the Bollinger's kind of pinched right here. If I had, everybody knows what compression means, right? That's when the Bollinger Bands come inside the Keltner channels. Now, I don't have the Keltners on here, but if I did, the Keltners would be probably like right around here or so. And then the Bollingers had squeezed inside. Actually, they would have merged together right around here. So if I had Keltner channels on it right here, that would probably be the low Keltner. This would be the upper Keltner right here, and then right around here is where it didn't break out the top side, but it did fire short down here. So when right here on this candle, right here, it broke out. So it broke the lower Keltner right here, and then Bollinger Band started following that. And we had this sell-off. And then what happened right here? Well, we found some support somewhere. So if I would go out to a longer term chart right here, I could probably see that there was a level where we had either a level of resistance or a level of support on a longer time frame. As a matter of fact, why don't we do that right now? So we're on 15 minutes, so let's take a look at the 60-minute chart. And it just so happens that I think we're talking about this right here. Notice I've got these two charts linked because I've got this interval badge selected right here, and I get it sky blue or cyan or whatever color that is. And so if I change something on this chart, it's going to do the same thing on this chart. And likewise, if I change something on this chart, it'll do the same thing here. But you see right here, we had a level of support. So this was overnight. We came down here, and then we bounced. Let's see. And see right there is what I'm talking about, that level right there. So we came down, hit this level right here, and actually, what happened here? And then we bounced, and that's what we're in a little bit of an uptrend right now, coming off of these bounces here. The Qs is kind of interesting right here because if you look at my charts, what I've got is this white one right here, this one right here. This is my 200 symbol. And price came right down to it. It did wick all the way down. This one below it is the 100. So this is the 200. The white one's the 200. The red one is right here. This is the 100. And then I've got the cyan one right here. That one is the 50. Now, those are the three long-term averages that I use. And these are all simples. Now, these ones in the middle right here, they're like the 8, the 21 to 34, and then the gray one in the middle is actually the 20 simple. That's the center of the Bollinger Bands. So we've got the long terms, the broads. Here's Michael likes to refer to them, the 200, the 100, and the 50. And then we got the shorter terms, which are exponentials right in here. But interesting, we got this pullback, and then what did it come down to? It stopped, and then it did wick down below it, but it closed right here, and that's right around where that 200 is. Now, if you look at the ES over here, the ES actually broke through it, and it broke through the 100 right here. But we did find some support, and if you go back and look, this is what I was talking about. It came down to this level here, and what do you see? If you draw this line, follow my cursor all the way back over here, you see there was a couple of places where we came down close to this level right here, right here. This was back during the first week of January, last week. And then also right here where we came back down and went just below it. But you can kind of see that we got a little range of support right here. So price rallied off of it, and then it came back, and it came right back down to this level here. And then it moved on up. So anyway, that's kind of what's going on there. But, for what we're doing right now, we're looking at what's going on, and it looks like we found support, and looks like the futures are trying to move up. We've broken over the 200 here on the ES, and on the Qs right here, we moved to the upside. This is the 60-minute chart that we're talking about now, but still yet same price action, moving up, moving up, moving up. And I've got a couple of, let's see, I drew this line. This was yesterday's close at 4 o'clock on the Qs and on the ES. And you can see price is below on both of them. And, we've got negative numbers up here, we've got red numbers. So that tells us that we are down from where we were yesterday for a bit. But we found support and in the overnight session, like that, and we're bouncing off of it. So we could come back up and we could challenge this level right here where we were yesterday. And, it could hit that and it could fail and come back down and trade in this range down here, or continue to the downside. Or it could break it, and then we could look to move to the upside. So we might get a break and then a move up, and then come back and retest it. If it holds, then we may have a chance to continue to the upside on that. That's one of the things we'll just have to watch. And this is what happens with, we look at the futures overnight and what's happening. We look at our pre-market and see what price is doing. It gives us an idea as to what might happen, in the early morning or the morning session whenever the market opens. There's no guarantees. A couple of things on this. You look at the RSI, you got the 321 down here. We got you got negative MOMO going on, momentum on the 321 indicator. We're down here in a red histogram, but notice it went from a bright red to dark red. And what that means is that the intensity of the momentum is changing. It's getting stronger and stronger to the negative side, and then it hit a bottom and it started changing, and it's getting less and less negative. So there's a good chance it continued to get negative, less negative, and it can come back to the zero line right here. And if it does that, it could go into compression, or it could just, kind of do like what we've seen here, where it comes down and then it comes up, and then it just goes positive, and we get this kind of a rally right here. So we can watch that indicator and see what's going to happen there. You got the RSI right here. This is an indicator that Kevin coded for us. This is the RSI mid. And what it is the RSI. And then we've got a 50% or a 50-point center line right here. And we look at the RSI value, and whenever it crosses to the upside of the 50, we get a green bar, vertical bar right here. And if it crosses to the downside, when it goes below the 50 point, then we get a red bar right here. So that's something that we look at there. And it's pretty easy right there. If you don't have this indicator or access to it, you can just put the regular RSI up there, and you can draw you a 50% line on it. Just do a horizontal tool right here and draw a line at 50%. You can go in and just draw it, and then you can edit it and put it actually at 50, and then you can just kind of watch your RSI, and whenever it crosses, then know that a lot of times that is going to give us, a good point for entry. And these kind of things work. I'm talking off of like day trading and all like that, but these indicators and all, they work on every time frame. So this will work on, if you're trading the daily chart or you're trading the 4-hour chart or whatever like that, these indicators will work on those. So you got the momentum indicator, which will give you signals based on that time frame that you're looking at, and also, the RSI. If you've got the RSI mid, you can use that. If you just have regular RSI, then draw you a 50% line on it right there and start looking at that. And then go back and look at your charts and see what happens whenever it does cross 50. See, like right here, it was in the upper half right here. And what that means, if it's above 50, that means that the buyers are in control. And look back through this whole trend right here. So we came down, and then we hit the 50 right here. It went below it with the red bar. And then we came right back up. So it went down here, right? Okay, it was going up, it came down. It found some support, and then it went right back up. And then you get this upward trend here to the upper line up here at 70%. It's not really 70%, it's 70. It's a calculation or whatever. So you got, it's from 0 all the way up to 100. And 50 is the midpoint right there. 70 is usually what the threshold is on the upper side, and 30 on the lower side. You can change these if you want to, but the standard is 70 and 30, and the standard period for the RSI is 14 day or 14 periods. And these are all based on the closing candle values, not the highs or lows or anything like that. You always want to have your indicators based on the closing candle value. But you can see right here, it crossed back over, and then once it went back over, it came up here above the 50, and it stayed in this zone right here. And this is the buy zone here. Once it gets up to the extreme, that's overbought up here, and you have a tendency for it to then pull back some, or either move down to the oversold area. areas here. You get these cycles going on. And you can see right here when it started pulling back, it rallied up and then it started fading a little bit. Then it caught some more support right here. RSI came down and then it turned back up and then we got another rally. And then we went extreme right here, extremely overbought, and then it pulled back. It crossed the 50 right here, and look, it went down, and it actually broke a bunch of these moving averages. It broke below the 50 right here, and it came on down to the 200, and came on down to the 100 and all like that, and got down here. And that's down here in the seller territory. That tells me that the sellers are in control. But we're also getting we bottomed right here, and we got like a little bounce and a little bit of an uptrend. Still in seller territory, but we got a positive slope going on here. And you can see that in price action. And Momo is getting less negative. So we'll see if that's going to continue. It doesn't necessarily mean that it's going to go positive, because it could come back up and then it could go dark. It could go bright red again and then turn back down. You can look back through your charts and you can see those kind of things happen too. So that right here, here's an example where it was coming down, 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 and then it started moving up. See, it moved up, but then it rejected. It never got up to the zero line. It came back down, had another sell-off, and then it started turning again. This time it did go positive. And we broke some of these levels here. It broke the 50, but it didn't make it up all the way to the upper Bollinger Band. It did break the 200 right here. And then we had this huge sell-off candle. This was January 2nd. And then it fell down to the lower Bollinger Band here. The Bollinger Band's opened up to accommodate that move. And then it rallied off of it. So
thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.